Welcome to Markets Now. I'm Michelle Rook with Martinson Ag. We're seeing mixed trade in both grain and livestock futures right now. We're seeing a little pressure in the row crop sector, wheat to the plus side, as well as the cattle market with hogs lower. And let's start off, Randy, talking about the soybean market, a big uptick yesterday, but not a lot of follow through here today. Is the market kind of looking forward at some of these extended forecasts in Brazil, or what's going on?
I think they are. We had no export sales. There was rumors that China was in buying. We didn't see any confirmation of that, and I think that disappointed the market. But I think overall they are looking at this weather forecast as it looks like by the middle of December, the forecast is calling for Brazil to see a complete 180 in their weather, where it's going to get a little bit wetter in the north, drier in the south, and that's going to be kind of, I think, a hard trend to switch at this point, but right now the forecasts are calling for it, and I think the market is paying attention to it.
Now, yesterday we did have some forecasts for production in Brazil that were downgraded pretty hard. Was that part of the rally that we saw yesterday as well? And you have sources in Brazil. What are they telling you?
I think it was part of it, and we are hearing some, decreased production estimates coming out. And right now, from what I'm hearing from a lot of guys, is that they're looking at the harvest, for soybeans running anywhere from 30 to 60 days behind normal, which that's going to make it tough to come in and plant that second safrinha corn crop. And I think that's really where a lot of the story is going to lie right now for Brazil.
Yeah. And you hinted at the fact that part of yesterday might have been China export rumors. What are you hearing there?
Supposedly, China was in and bought, somewhere around that 3 to 5 cargoes. We did see that unknown announced yesterday. We were expecting to see more follow through here today. I think the market was a little bit disappointed that it didn't.
Gotcha. And corn right now is kind of following soybeans, even though wheat is higher. And we've kind of pierced that 450 mark on the December corn, right?
We did. We've gone down, where I think we hit 449 here this morning. So we're seeing a little bit of pressure behind it. But I think right now there's just such a massive amount of positions that need to roll for that December contract that is what's putting some pressure in on the corn market. Corn just doesn't seem to be participating in anything at this point.
Yeah. And do you anticipate there's going to be some heavy deliveries against the December contract when we go into delivery period tomorrow?
I would be surprised if we didn't. Right now, the way things are looking in corn, I would think we're going to see some heavy deliveries. And I saw the open interest yesterday. I think we still have like 155,000 contracts that need to be out by the end of today. So we've got a little bit more of a push to go in corn, and I think that's what's kind of keeping that a little bit under pressure.
Yeah. And obviously the market is telling you they don't need corn right now with the carry that we have, right?
Oh, most definitely. And that was part of the struggle, I think, that corn had too, is that there was a lot of basis fixed contracts against the December contracts, and the roll to March was 20 cents. I mean, that's one of the largest rolls I've ever seen. And, even the roll to July now is at over 40 cents. So there's a huge carry in this market. So it's given incentive to continue to store the corn.
Yeah, it's certainly different than we've seen the last couple of seasons for sure. Wheat market, though, is up this morning, and we were up big yesterday. Was that all just short covering activity or corrective buying, or, was there something fundamentally that was pushing it?
I don't think there's anything fundamental right now. I mean, we've gotten, the winter wheat crop has improved. It went into, dormancy. The last look at the crop progress report was 50% good to excellent, which is not bad in condition ratings. They picked up some good snows against across Kansas. So I don't think fundamentally we're seeing anything. I just think it's technical. I mean, you can only beat a dog so much before it'll turn on you. And I think wheat right now has gotten to the point where it needs to see a little bit of a bounce, or it's just not going to be part of the equation going into 2024.
Yeah, we did see new contract lows already or yesterday in a couple classes and some new lows for the move. And I think the other class. And so we're down at these low levels. And there was talk about Russia and an export ban, but certainly I don't think you can believe Russia on their face value on that, can you?
I don't think so. I mean, what's interesting is they came out and said they're considering banning exports, but then their ag minister came out and said that they're 98% harvested on their winter wheat crop, and it looks like it's going to be 99 million metric ton, the second largest crop ever. So, they're saying one thing and doing something else.
Yeah. So cattle had a huge update yesterday, a limit up move in the Jan feeder. So we're under expanded limits this morning, both live and feeder cattle futures. we're seeing a little bit of follow through after kind of some two-sided trade early. So do you think we put a low in?
Well, I certainly hope so. I mean, this cattle market's been beat up pretty bad, from the virtually we've taken in the feeder cattle all of January's gains away. So we're back to where the January came on board back last year, losing $56 here in a very quick order. So I do think this market's extremely oversold, but there's been enough concern and enough panic selling that any rally has been met with a little bit of hedging or marketing. So I think if we can get past that, we can see a 30% retracement. If we can get to that level, I think, which would be another $8 from where we're at, I think then we could see this market recover a little bit more. But right now, it definitely, I'd like to think it's a buyer's market, but I'd be cautious.
Yeah. But if you were a hedger, live cattle futures were going lower and the cash market didn't really move a lot. We had some 175 yesterday in the South, but still, you were making money there, weren't you?
Oh, I think so. And what's interesting is, you mentioned live cattle futures, I think have dropped like 20 some dollars, but the cash has only dropped, $5, $6. So,
Yeah.
the cash market isn't quite following the same as where the futures market is following. So you're still doing a little bit better on the cash side. And I think that's going to cause a little bit more of a run happen in the short term.
Well, yesterday we had a nice run up in the hog market, and that was in the face of a day where we had some lower cash and cutout values, and the lean hog index continues to kind of fall here. So how much of a headwind is that going to be for this market going forward, Randy?
I think it's going to be a little bit of a headwind. I mean, again, seasonally, you don't see much demand right now. We're hearing talk of trouble again in China. Hopefully, that can start building some exports again. But overall, I think, the meats are going to be somewhat tied to the economy. We've still seen a little bit better performance there as the Feds came out yesterday and said that they're not looking at increasing interest rates for 2024, and they're possibly hint of a lower interest rates later in the year. We'll see how that comes into play. But right now, I think we need to get through the end of 24 or end of 23 and start seeing where production is going to be for 24.
Gotcha. Crude oil back up this morning. We had a nice update yesterday. Is most of that tied to these possible OPEC production cuts?
I think it is. I mean, and we keep hearing some possible delays in the meeting, but it's supposed to take place tomorrow. It's very likely that we're going to continue to see some production cuts. And I think, technically, we had the crude trade down to some support, and I think that helped to bounce the market a little bit as well.
Yeah, and the dollar's going the opposite direction this morning.
So, and that should, that's going to bring in a little bit of trouble to us. But I think overall, our exports have started to build here since we got into November. Hopefully we can continue to see some good demand.
All right. Thanks for joining us, Randy Martinson, Martinson Ag. And that is Markets Now.